What if I told you SoFi's plan to become a $1 trillion company just leaked? It's not in some secret document. It's a strategy that CEO Anthony Noto has been executing in plain sight, leading to record revenue and explosive growth. While most investors are stuck debating if it's a bank or a tech stock, they're missing the bigger picture. They see a fast-growing digital bank, but they fail to recognize the powerful, interconnected machine being built right under their noses. For years, the market has been trying to fit SoFi into a neat little box. Is it just another lender subject to the whims of interest rates? Or is it a high-flying tech company that deserves a massive valuation? This debate has created a fog of uncertainty, causing the stock to swing wildly. But the answer has been hiding in plain sight, embedded in the company's strategy and proven by its stunning financial results. In this video, I'm going to reveal the 3 core pillars of SoFi's Masterplan that could make it one of the most dominant financial institutions of the next decade. The first pillar of SoFi's Masterplan is what they call the Financial Services Productivity Loop, but it's better understood as the One-Stop-Shop Flywheel. This isn't just about offering a bunch of different products. It's about creating an ecosystem where each product makes the next one more attractive and more profitable. The goal is simple but powerful. Attract a member with one product, and then keep them in the SoFi universe for life. Think about how you probably manage your money now. You might have a checking account with a legacy bank, a brokerage account with another firm, a credit card from a third, and a personal loan from a fourth. None of these services talk to each other. They don't share data to improve your experience, and each one required a separate, tedious application process. SoFi's strategy is to tear down these walls. It often starts by attracting new members with a high-yield SoFi checking and savings account or a competitive loan. Once they're in the door, the flywheel starts spinning. That new member is then introduced to SoFi Invest, the SoFi credit card, SoFi insurance, and more, all within the same app. The beauty of this model is that it dramatically lowers customer acquisition cost, which is one of the biggest expenses for any financial company. Instead of spending hundreds of dollars to acquire a customer for just one loan, SoFi can acquire a member once and then cross-sell them multiple products over time at a fraction of the cost. And the proof is in the numbers. In the third quarter of 2025, SoFi added a record 905,000 new members, bringing its total to over 12.6 million, a 35% increase from the year before. But here's the metric that really matters. Those members are now using nearly 18.6 million products, up 36% year over year. This shows the flywheel isn't just a theory, it's a powerful engine for growth. The company has reported that cross-buy activity from existing members is at a multi-year high, showing that the strategy of deepening customer relationships is working. This focus on cross-selling transforms SoFi from a collection of products into a cohesive platform. It increases the lifetime value of each member, making the business more profitable and creating a competitive moat that traditional banks, with their fragmented systems, struggle to replicate. Every new product a member adopts makes them stickier, feeding a cycle of perpetual growth. This is the foundation of the master plan. If the one-stop-shop flywheel is the blueprint, then the second pillar is the high-tech engine that powers the whole operation, its technology platform. This is the part of the business that many on Wall Street misunderstand, but it's the key to unlocking a tech-style valuation. CEO Anthony Noto's vision isn't just to build a better bank, it's to build the Amazon Web Services of Fintech. This ambition was supercharged by 2 game-changing acquisitions. First, in 2020, SoFi bought Galileo Financial Technologies for about $1.2 billion. Galileo isn't a name most consumers know. It's a B2B powerhouse that provides the back-end infrastructure, the digital pipes, for countless other fintech companies and neobanks. By acquiring Galileo, SoFi didn't just buy a tool, it bought the factory that makes the tools for much of the industry. Then, in 2022, SoFi doubled down by acquiring Technisys for $1.1 billion. Technisys provides a modern, cloud-native core banking platform. While most traditional banks run on clunky, decades-old mainframe systems, Technisys offers a flexible core that lets financial companies launch new products in a fraction of the time. By combining Galileo and Technisys, SoFi created one of the industry's most comprehensive, vertically integrated banking technology stacks. They own everything, from the customer-facing app down to the core banking ledger. This gives them 3 massive advantages. First, they can innovate at a speed legacy competitors can't match. Second, it generates significant cost savings. SoFi originally estimated that moving to its own tech core would create cumulative savings of $75 to $85 million through 2025, and $60 to $70 million annually after that. But the third advantage is the most crucial. This tech stack isn't just for SoFi's own use. They sell it as a service to other companies, creating a high-margin, capital-light revenue stream. This is the AWS of Fintech vision in action. Just as Amazon built a massive cloud business by leasing its internal infrastructure, SoFi is doing the same for financial services. This B2B technology segment diversifies SoFi's revenue away from lending, making it less vulnerable to economic cycles and providing the kind of recurring revenue that is characteristic of high-growth tech companies, not traditional banks. A master plan is just a fantasy without execution. But SoFi is delivering the numbers to prove its strategy is accelerating. In the third quarter of 2025, SoFi shattered records. The company reported GAAP net revenue of $962 million and adjusted net revenue of about $950 million, a stunning 38% increase from the same period last year. This wasn't a fluke. It was the result of a deliberate strategic shift. For the first time, SoFi's financial services and technology platform segments together generated more than $500 million of quarterly revenue, representing 56% of the company's total. This is a monumental shift. Specifically, fee-based revenue, which comes from these capital-light segments, skyrocketed by 50% year over year to a record $409 million. This means a huge chunk of SoFi's income is now less dependent on the risks of making loans, making the business more stable and scalable. Even more impressively, SoFi has proven it can grow without sacrificing the bottom line. The company delivered its 8th consecutive quarter of GAAP profitability, reporting a GAAP net income of $139 million. This consistent profitability separates SoFi from many other high-growth fintechs that burn through cash to scale. The fuel for this financial engine is a rapidly growing and stable base of low-cost capital. Since securing its national bank charter in 2022, SoFi has been able to accept member deposits, which have swelled to a massive $32.9 billion as of the end of the third quarter of 2025. This is a game changer. It means SoFi no longer has to rely on expensive, third-party capital to fund its loans. Instead, it uses its own members' deposits, which dramatically lowers its cost of funding and boosts its profitability. Looking forward, the company's own guidance reflects extreme confidence. Management has raised its full year 2025 forecast, now projecting adjusted net revenue of approximately $3.54 billion and adjusted EBITDA of over $1 billion. These aren't just ambitious targets, they are milestones on the path to becoming a dominant financial institution. The final pillar of SoFi's master plan is its most forward-looking: the push into global markets and the embrace of Web3 technologies like blockchain and cryptocurrency. If the first two pillars are about dominating the US market, this one is about redefining financial services on a global scale. CEO Anthony Noto has called blockchain a supercycle technology, and SoFi is actively building the infrastructure to make this vision a reality. After pausing its crypto offerings in previous years due to the regulatory environment, SoFi officially relaunched cryptocurrency trading in November 2025. This move made it the first nationally chartered bank in the United States to offer its members direct access to digital assets like Bitcoin and Ethereum right within its app. But simply allowing users to trade crypto is just the first step. The true master plan involves integrating this technology into the core business. The company has announced plans to let members send money abroad using blockchain and stablecoins, partnering with companies like Lightspark to make global remittances faster and cheaper than traditional systems. This isn't just an incremental improvement, it's a potential disruption of a multi-trillion-dollar market. CEO Anthony Noto has even mentioned a potential SoFi-branded stablecoin in the future. These Web3 initiatives are being built alongside a significant investment in artificial intelligence. SoFi is already using AI in areas like loan underwriting and risk management. The future vision, however, is to deploy a platform-wide AI advisor, a SoFi coach, that can analyze a member's complete financial picture to provide personalized guidance. This third pillar is what truly separates SoFi from the pack. While traditional banks are still struggling to build a decent mobile app, SoFi is building the financial infrastructure for the next generation of the internet. It's a bold bet that aims to not only capture market share, but to become the platform on which the future of global finance is built. With this three-pillared master plan in motion, we can finally address the question that has confused investors for so long. What is SoFi actually worth? And what is the path to the trillion-dollar valuation that CEO Anthony Noto has openly stated as the company's ambition? Right now, the market is still split. SoFi often trades at a high price-to-earnings ratio, far richer than traditional banks. This suggests some investors see it as a tech company with a long runway for growth. However, the stock's volatility shows many others still view it as a traditional lender. This disconnect is where the opportunity lies. The Masterplan is designed to force the market to recognize SoFi as a technology-driven platform where a majority of revenue comes from high-growth services. A major catalyst that could accelerate this re-rating is SoFi's potential inclusion in the S&P 500. As of late 2025, SoFi appears to meet the primary eligibility criteria. It has a sufficient market capitalization, is a US-based company, has sustained GAAP profitability for multiple consecutive quarters, and its stock is highly liquid. While the S&P Index Committee's final decision is discretionary, meeting the criteria is a massive milestone. Inclusion in the S&P 500 would be more than just a symbolic victory. It would trigger a wave of forced buying from index funds and ETFs, creating massive institutional demand for the stock. More importantly, it would serve as powerful validation of its business model, potentially shifting its perception from a speculative fintech to a blue-chip financial technology leader. Achieving a $1 trillion valuation is undoubtedly a monumental leap, requiring something close to a 30-fold increase from its late 2025 market cap. However, Noto's vision is based on a clear, long-term strategy. He has articulated aspirational goals of reaching 50 million members and 150 million products by 2030. By continuing to execute on its flywheel, expand its tech platform, and pioneer new global markets, SoFi is laying the groundwork to command a valuation that puts it in the same league as today's technology titans. No master plan is without risk, and SoFi's path is filled with potential obstacles. The biggest risk is execution. Sustaining its high growth rate will become more difficult as the company gets larger. Any stumbles in fending off fierce competition from both legacy banks and fintech rivals like Block and Upstart could slow its momentum. Furthermore, SoFi is still subject to macroeconomic headwinds. A severe recession could lead to higher loan defaults, and while the company's risk management has been excellent, a major economic shock would test its resilience. There is also the risk of shareholder dilution. SoFi has used stock offerings to raise capital for growth, such as a $1.5 billion offering in late 2025, which caused a temporary dip in the stock price. This is a reminder that growth often comes at a cost. However, when you weigh these risks against the sheer scale of the opportunity, the bull case becomes incredibly compelling. SoFi is not just another bank or fintech app. It is a vertically integrated financial machine with three powerful growth engines. The One-Stop-Shop Flywheel is creating a sticky member base. The AWS of Fintech technology platform is delivering high-margin, scalable revenue. And its forward-looking push into global payments and Web3 could unlock entirely new markets. CEO Anthony Noto's ambition to build a $1 trillion company is bold, but it's backed by a clear strategy that is already delivering phenomenal results. The debate over whether SoFi is a bank or a tech company is the wrong question. The answer is that it's both, and that hybrid model is precisely what gives it the potential to become one of the most important financial companies of the 21st century. So SoFi's $1 trillion master plan isn't a leaked secret. It's a public declaration of war against the traditional financial system. It's a strategy built on three pillars: a sticky product ecosystem, a dominant technology platform that functions as an engine for the fintech industry, and a bold push into the next generation of global finance. The numbers prove the plan is working. Record revenue, explosive member growth, and consistent profitability are current realities. While significant risks remain, SoFi has a clear roadmap to a valuation that could one day dwarf even the biggest banks. The only question left is whether Wall Street will recognize the revolution that's happening right in front of them before it's too late. Let me know your thoughts in the comments below. Do you believe in SoFi's $1 trillion vision? What do you see as its biggest risk or its greatest opportunity? Thanks for watching.